Ladies and gentlemen of the crypto space, we're live on a Friday, January 24th at 11:32 a.m. This should be a fun stream. There's a little bit of pep in our step, and we got some incredible data on DeFi Llama that we'll get to also. But we got to talk about the elephant in the room because the story that everyone must understand, aside from the absolute degenerate speculative frenzy on Solana, is how the dollar controls the entire system. And when this thing rolls over, crazy shit happens. And that crazy shit has really nothing to do with a particular chain. It's literally the entire space. Absolutely gets wild. They could always count on the winners to take their capital, and it bleeds over everywhere. Everything gets monetized. I mean, you telling me you got like 50,000 people that invest in a meme coin on Solana and 3 people reap all the gains. What are they going to do with their capital? All right, fine. They reinvest in some silly meme coins, 1%, 2%, and then they bleed it over onto mainnet because they're like, all right, I'm going to take 5 mil and throw it on Aave for 10%. The capital bleeds over, and then that capital becomes part of circulating supply, and shit just gets weird. But that is all predicated on the dollar doing probably what it's doing right now. Now, we had 2 nice runs in 2024 depicted by the arrows on the screen. It is as simple as this, ladies and gentlemen. You can look at whatever metrics folks are posting on social media nowadays, but the entire system is governed by the dollar. And when the dollar reaches a cyclical and hopefully secular this time top, weird shit happens. Those 2 runs, as depicted by the arrow, are very obvious. We had runs at the beginning of the year. Cosmos was an absolute frenzy. And then towards the middle of the year, Solana meme coins really took off. Then Base took off. Then mainnet remonetized. Then Arbitrum did okay. Optimism did okay. It's been bleeding out the last couple of weeks. But suffice it to say, Solana is still absolutely insane. The story really is Solana right about now. I don't want to focus on it too much because it's noise, which is downright fascinating, but it's real. So when the dollar rolls over, everything's just going to get so goddamn weird. I've been screaming that since probably 2023 at this point. And this is an extended dollar distribution, it's accumulation. It's not distribution. And now that is a wick. That is a massive, massive wick. 1 week left for this monthly close. If we lock this close, that is a wick that goes back to 22. That is a topping wick. That's called the shooting star candle. And then we look for February for confluence. If February closes below the close of January of 25, then you have confluence saying, all right, now the dollar has topped. But this is constructive to say the least, because that's a hell of a topping candle. That is a shooting star, ladies and gentlemen. And if we know what happened in 24 when the dollar depreciates, and we know what happened in 20 and 21 when the dollar depreciates, and we know what happened in 2016 and 17 when the dollar depreciates, when the dollar depreciates from this level, it's going to be gross. And obviously it all falls apart at some point, but we're not even into the cycle yet. That's what everyone needs to understand. I'm going to zoom out real quick, and then I'll talk to something to points more substantive that folks like to talk about. Coins and buying things and data and metrics. This is a lovely weekly candle too. This might be the largest weekly candle since this bottoming in July of 23. That's actually crazy because this is like a spinning top right here into a monstrous bearish engulfing, coming back below the 107.35 line, which is a critical historic level dating back to when? What, the 70s? I'd have to go further. Whatever, I'm not going to do that right now. So it's lovely historic level. Zoom out, reset, there you go. Look at that, right into the 200 SMA on the weekly. We flew back in September of last year. Anyway, I'm comforted. I get excited as much as the captain expresses that everyone really should peer through the noise. I'm excited. This is exciting because I look at the data to allow time to pass. And every now and then, the data says, yeah, markets are going to do you well. And this is a candle that supports that type of opinion of the market. And candles matter. Okay, let's look at that data. Solana's, I don't know what the fuck's going on, Solana. I think what everyone thinks is actually the case. There's no hope, with an average salary. Everyone's done. The kids are done. Gen, alpha, beta, gamma, delta, epsilon, zeta, eta, theta, whatever. They're all done. So they're all just out there at the casino because that's what it is. It's a casino, but it's an endless casino where anyone could print a token in 5 seconds flat with pump.fun. I mean, it literally takes 30 seconds to create anything you freaking want with all the memes, and all you gotta do is go on Mid-Journey and use some chat GPT to spin up a social media interface. I mean, frankly, look, I built Agent Rational in less than a week. So that's a meme coin associated with a robust AI agent. And as long as Virtuals actually decides to work, it's a very smart agent because we dump these streams into its data set. That's another story. That's another story. Point is 416% week over week volume increase. What the hell is going on? Clearly, this is an expression of the state of society, unfortunately, but that's besides the point. $13.6 billion in a week. Now, what's even more notable, aside from the volume, Solana has had a 77% increase in currency supply in a week. That is a parabolic move. $10.83 billion. That is it is the dominant chain for dollar supply other than Tron and certainly Ethereum mainnet. It is very important for folks to understand if you want to gamble, this is where you gamble. It's not on base chain. Base chain with Aerodrome and Coinbase narrative has a much stronger narrative. There's nothing to Solana from an investment standpoint at all. And I validated that because if you look at volumes, you're literally looking at Radium, and there's nothing to invest in. Radium is a dead investment. It pays 5%, and it is doing $7 billion a day, and it's paying 5%. It's uninvestable. So, I mean, you can have Uniswap, which pays nothing, which is just the antithesis of an investment. And then you can have something like this that actually pays you something, but it's completely invalidated. It's uninvestable. I don't understand what to make of it. I just don't understand what to make of the protocols. Just my 2 cents. The only thing I'm looking forward to on Solana is the Solve 3 launch, and I expect a fat airdrop associated with current exposure and their announced airdrop guidelines or rules or whatever the hell their plans. Sure as hell won't buy it. It's gonna be just gross. Um, it's just gonna be a frenzy. It's gonna go up and to the right because everything on this fucking chain goes up and to the right. It's a debauchery. This is some Roman orgy shit going on right now. How else could you possibly describe it? I've never seen anything like this. So if almost all volume of $7 billion a day is occurring on Radium and it's paying 5%, what are you gonna? You can't invest in. There's nothing investable in Pump. $1 billion a day. I mean, let's take a look for 5 seconds. I haven't looked. It's $1 billion a day going through here. The fuck is this? Clearly nothing investable there, no display, no rates, no nothing. I mean, this is obviously a topical inspection, but let's do it. See if there's any rates anywhere. See if there's anything. Orca token. Oh my God, documentation. Governance rewards. Is this a spreadsheet? Oh dear Lord. Let's go back because we just nailed 2 of 3. And what the fuck is Meteora? Part of my language because it's just, oh my God, is this NFTs? I don't want farms. I don't want vaults. I want, where the hell is the protocol transaction fees? Oh my God. Oh my God. Oh my God. Here's what it is. All this degeneracy results in one thing. 10,000 people's capital gets converted into 10 people's capital. And then those 10 people have a shitload of money and they're going to do something with it. And it bleeds over into the entire system. Capital flows to where it's best treated in a risk adjusted fashion. So if someone popped in 5 grand and turned it into 10 mil, they're going to more likely than not start to think in a risk adjusted way. Now, many people that make money end up losing it all. It's the nature of the lottery. Um, but ultimately capital will flow off of Solana. So all in all, the biggest takeaway that I would like to be very clear about with Solana at 10 bill in dollar supply is that it is non-existent compared to Ethereum mainnet. Ethereum mainnet has over 1,000% more dollar supply. It has 11,600% more dollar supply. I'm sorry, 1,600%. No, oh my God, 1,160%. I don't know, some shit like that. It's 11x more supply, and that is obvious, clear, unambiguous. The king of dollar supply is mainnet, and mainnet is up and to the right. Mainnet is absolutely parabolic. So the story from an investment standpoint is certainly mainnet. You might have good opportunities on Arbitrum, Optimism, Base, because as I said, capital flows, especially with the dollar rolling over, the dollar's supply in these markets will bleed over from market to market and monetizing everything. I think the Arbitrum dollar supply ends the season at 3 billion. No, it ends at more like 30 billion. Same with Optimism. And mainnet ends it at 300, 500, 700. I don't know. And it's at $1 trillion supply with what the policy of the administration has been over the last, 4 days? Oh my God. So don't get lost in the noise. When folks get excited about Solana, the most important thing right now is risk, because this market makes money for everyone if you're risk adjusted, meaning if you own something over the next months, it's going to appreciate because there is a massive influx of dollars into the system, which will monetize everything. And as something monetizes, you have a siphon effect. Capital flows beget capital flows, monetization begets monetization, and things just go up and right in the price. But if there's a speculative frenzy where something significantly deviates from the mean, which is, a technical type of conversation for meme coins, because inherently it's all deviated from the mean. There is no mean. It's just, player versus player, get out as fast as he can and take everyone's money. So absolutely stunned. 56% tether dominance. I would love to see exactly what I suspect in the coming 4 to 8 years, post 2030 into 2030, endogenous rather than exogenous currency supply. So we are not at critical mass for where I see this market heading. I think CRVUSD bold dollar MIM. I think the supply of on-chain CDP stablecoins goes absolutely parabolic at some point, especially as the collateral, the prime collateral for these crypto markets, goes parabolic in price, Bitcoin and Ethereum. And then you got other quality collaterals that are accepted on a variety of these liability destinations, especially as DeFi money comes online, taking the long tail assets, GMX, OP. People are going to leverage the shit out of everything. So I think endogenous dollar supply at some point, it only makes sense for endogenous dollar supply to trump, pun, to trump exogenous dollar supply, which means you could have a 10x, a 50x, a 100x increase in endogenous currency supply. The amount of cash flow that would occur in that kind of situation would be hard to put into words, which would further encourage monetization of the respective protocol. So obviously, big fan of CRVUSD and Curve. I am a fan of how Liquidity launched. I think the user interface is actually quite appealing. Flows. Let's put it very simply. If you borrow, this is what caught my attention. So the manual kind of reminds me of like Uniswap v3 and how they start to give control to users. I don't know how many people want that control. I wouldn't. I just want a managed interest rate that's respective of current market conditions. I want my damn interest rate to go up. I don't want to be liquidated. I don't want to manage this shit myself. What I want is if the value of ball decreases, I want the damn interest rate to go up. I don't want any forced liquidation. So this was a comforting thing to see. When I saw this, I was a chosen position. I think this was yesterday. Was it the day before? No, they launched yesterday. So if anyone knows how to play the Curve vote rental game, it's Liquidity. They also know how to do it on Balancer, and they probably understand the VE33s at this point. So we'll see how that plays out. Suffice it to say, I think the ball supply will increase meaningfully, especially in bullish conditions. But you got to remember, this isn't winner take all. Everything is not an arbitrage, but everything is a seesaw. CRVUSD supply goes up, vol goes up, supply goes down, interest rates go up, and capital flows go back and forth, and there's arbitrage all over the place. And that, my friends, is by definition an economy where capital flows to where it's best treated, where the interest rate is superior, or where there's an arbitrage. And this occurs obviously between the networks. So this is a nice addition to what's currently available, setting up for a remarkable bull market. So this is interesting. So this is market set interest rates, 12.6%. And that is what we have across the board. That's what all of these systems do. You go over to CRVUSD, you go over to market. Oh, would you look at that? On average, what's the damn interest rate? Okay, you go over to AVE, dollars, AVE, you go over to AVE, a little bit less than 12. So there you go. There's your arbitrage. Do you want to shave a 0.5% off your interest? It's variable interest rate. And it's the crypto space. So the volatility of an interest rate means, all right, fine, you just sit and take the 0.5% hit instead of taking the slippage and the transaction fees to move your collateral over to another lender. But this is a really nice presentation, actually, given how consolidated the collateral is. Here's your fair market value interest rate. Very simple as compared to CRVUSD. I'm curious, very curious. I haven't looked into it. If they have pay keepers, like how do they manage over collateralization? That is critical. You don't want to see a dollar stablecoin running at $1.04, $1.05. That doesn't work. So you need to manage upside peg, and clearly downside peg is managed by their liquidation engine. And the fact that their liquidation engine, unlike Liquidity V1, has a managed option, it's variable interest rate, set the fair market value. So this was comforting. I don't know how well Liquidity is gonna pay. I don't know. That's to be seen. That's to be seen. It comes from V1 revenues and incentives on vote rentals because I'm curious. So this is part of the spec revenue category. I understand where we are in the market, and markets are going to go parabolic at some point. So I was able to justify this kind of exposure. Just bear in mind the captain always has to run this shit by the wife. So I really need a good story in order to justify an expense for a purchase. And when that story happens, all right, which is rare. So for the portfolio is few assets, rightly sized positions, relatively concentrated. And prior to this, it was Tango, which is paying insane. It's got to be the most mispriced asset I could think of right now. I mean, it literally gives you looping exposure to the entire crypto space on chain after chain after chain. It's literally exposure to everything. I just, it brings me back to maybe the Solana point. We're not dealing with a sophisticated market. We're not dealing with users that understand, risk evaluation, risk management. I mean, where is Contango right now? Not 5%. Five. This thing's paying over 100% of AP. This is insane what this thing is doing. It's paying, next week's payout is 2%, not 2% APR, 2% for the week. Oh my God. I don't even have, I'm at a loss for words for what this thing pays. So there's a big options sale or an options distribution associated with their trading. They use options to incentivize trading, which is interesting because the odds are the traders are player versus player gamblers. So they're probably going to exercise their options and liquidate, which is going to be significant sell pressure. So we could see a significant move down even from 5 mil market cap. Which is notable. That's just a risk consideration. In the grand scheme of things, there's only one thing that matters when you own, after you own a position. You go over to analytics and you see their open interest. I bet you it's at like 490. All right. $490 million open interest for a $5 million market cap protocol is disgusting. Let's take a look at some of the revenues. I would suspect they were spiking $10,000 a day, give or take 9, 8, 9, 8. Oh my God! I mean, back in December, $18,000 a day, and this is all cash that gets given to us. I mean, it's pure cash. It's paid in USDC, Bitcoin, and Ethereum. It's just wild. So that's it. Those are the two of the most recent captain's picks. Obviously, Curve Federation remains core of the portfolio for rightful reasons. If you're thinking about stablecoins, you're not thinking about Swap. It's Curve. And if you think about stablecoins, you're thinking about what's the core of the network, that's mainnet, and that's exactly why we see what we see from a dollar supply perspective. Mainnet having $116 billion signal through noise. Solana is noise until it's not, but as of right now, it remains noise. This dollar supply is a signal. This is how Aave goes from a whatever the hell it's at, $3 billion market cap to $30 billion. This is how Curve goes, what, $1 billion market cap to $20 billion market cap. This is how the major infrastructure protocols experience multiples that didn't occur in 2020 and 21 because nobody knew what the hell was going on in 20 and 21. When this damn chart rolls over and breaches the 200 SMA and the weekly to the downside, you're going to see something you haven't seen. And you can't even compare to 20 and 21. Because when the dollar supply of the global financial system finally increases meaningfully, a significant capital expansion cycle, and then the blow off, when the blow off is really, your dips below the 200 SMA on the weekly, and the backdrop is protocols that survived 22, established infrastructure, trusted infrastructure, precedents, you're going to have a repricing. You're going to have a land grab. That's a post that I did, I believe, yesterday. Let's see if I can find it real quick. Where the hell is it? Did I really post it that long ago? It's going to be a land grab, meaning folks don't understand that these crypto protocols that folks buy tokens of, which we talk about in terms of cash flow, are businesses. These are akin to dividends and equities and better for the reasons we talk about. So what happens with the regulatory environment and the whole economic environment that's changing? This is where the corporations are thinking in terms of subsidiaries and an acquisition of businesses in a new market. They want to expand their market. So how do you do that? You buy it. You can't, there's no board, so you're not sending a letter of acquisition or a proposal for acquisition. You buy it on the open market, especially for the protocols where the tokens are completely in circulation. It's not like you could acquire an outside share by any other means. You literally just got to buy it from the market. So for them to add to their business portfolio as a subsidiary, they got to literally purchase it, which is going to monetize the shit out of everything. This didn't even remotely exist in 2020. Dare I talk about earlier cycles? Wasn't even a consideration. It's not the way the system worked, nor still works. But that's the way the system is going to work, because this is just insane. Let's put on the guppies real quick and remind folks, why are the guppies not rendering? Let's reload. Bear with me. Good to see the guppies. Good to see the guppies. Nope, I want DXY. Oh, there we go. That's fine. Draw. I don't know if the guppies are going to draw, but that's another story. Let's give it a shot, though. Anyway, but if the guppies don't draw, here's your bull markets. This is the last 8 years, back to 2016. When the dollar rips to the downside, that's when things get weird. We smacked right into the 200 SMA on the month. Oh, maybe the weekly, it'll show the guppies. Anywho, you breached the weekly 200 SMA to the downside, and this was where it started to blow off top. These were your blow off tops. This was your double top in Bitcoin. It's right here back in 20 and 21. Here's your double top in Bitcoin. It's so obvious, especially when you see the color coding of the guppies. But what I look forward to this cycle, you could probably really see on the monthly chart. Back in 2018, just at the end of 2017, obviously, we hit the 200 SMA in the monthly. Didn't even get close in 20 and 21. But if we breach the 200 SMA, you're talking start of confluence for the secular trend change that I'm expecting. Secular trend means quote unquote super cycle, means higher lows, higher highs across the board for crypto, significantly less retracement. Means the next cycle will be quite different as compared to every cycle previous. Because every cycle previous, the most important thing folks need to understand is this. I'm going to give you a big blue line. That's the dollar. That's the entire history of crypto right here. Everything back to the beginning of Bitcoin. Up and to the right, the dollar has been for all of crypto's history. We've never seen what crypto does in a secular dollar bear market. Secular basically means cyclically to the downside, lower highs, lower lows, as compared to higher lows and higher highs. And all we've ever seen is a crypto market existing in a higher, low, higher, high dollar world. Classic chart that I show, 6-month on the DXY, cyclically over significant periods of time, decade or more, dollar goes up, dollar comes down. I expect, I expect 10 years of dollar depreciation at some point for policy, domestic policy, and geopolitical reasons. It means higher lows and higher highs, especially an established crypto enterprise that is about to be monetized and added to corporate portfolios as quote unquote subsidiaries. Holy shit. Holy shit. Okay, let's go through some commentary and we'll see if we could talk about protocols. It's okay to talk about protocols today. When the dollar looks like it's topping, that's when we can start talking about protocols. I don't like to shill. I don't like to talk about protocols at the bottom because that's when people are risky and that's when people blame people. But when the dollar's starting to top, all right, fine, we can talk about this stuff. Most of the shit's repriced off the bottom. Most of the shit's at a premium, and I strongly have encouraged everyone to already be in position unless there is some sort of outsized opportunity, some sort of extraordinary mispricing observation, or some sort of discount. Um, and in that context, if you ask questions, I'm probably going to say probably should have owned it quite some time ago, unless you have reasonable justification, which is exactly what Ben's talking about halfway down the commentary with my acquisition of liquidity ownership yesterday. I'll get back to that, Ben. Kazika, greetings, Cap. Much pleasure, much pleasure. A lot of concept. Hi, Cap. How are you? Critical mass. Yo, yo, yo. Can you explain your thought process of why you got rid of CVX position? And then I'll bring on another thought about Aura. I want to own the base. I want to own void rentals of Curve, and I want to own the cash flow of CRVUSD. I don't want a derivative. Convex is a derivative of Curve. I'm not fond of derivatives. I want to own the fundamental business. Simple as that. I will be exiting my Aura position, which finally unlocks on January 29th. It is going the way of Convex, or the way I look at Convex. Bye-bye. I will not be buying anything. I will be just taking the cash. That's okay. It's probably a massive capital loss on the books anyway, but whatever. That is my plan of action in 5 days from today. Mateo, hi Cap, how are you? Arrow, good morning, my friend. Hope all is well. I'm slowly adding more to my VE Nile bag. If they can seal the deal with MetaMask, current user volumes on Linnea won't matter. Yes, I agree. That is speculative repricing. Um, that's a very interesting proposition. MetaMask reminds me of like a Coinbase. From my perspective and the way I operate in these crypto markets, who the fuck uses Coinbase? I mean, seriously. I haven't touched a centralized exchange since in years, literally years. MetaMask? Who trades from a crypto browser wallet widget? And now I understand the narrative. I understand that I am who I am, and I understand my experience. I understand so many people's experience, but that is a small bubble. The vast majority of people don't know these things, and they need these companies to provide products in a digestible format that are easier to understand, consolidated, simplified, making complex processes simpler, etc., etc. So in that regard, yeah, I could see exactly why you're doing that. That is a very reasonable speculation. MetaMask routes everything through Nile. For Linnea, which is their chain, consensus everywhere. MetaMask and Linnea. That is an interesting investment thesis, to say the least. What would I say to that from my perspective? Which is fine. I have exposure. I already have exposure. I don't want more exposure. What I want heading into a bull market is cash, more and more cash. You accumulate cash on the way up, everything explodes, and you execute hostile takeovers of businesses that prove themselves in the 24-25 cycle. Just like things we own now were proven in the 2020 and 2021 cycle. When Trump and Melania came out, it sucked liquidity over to Solana and caused huge ARB opportunity, which drove a big increase in TVO. There's more than just TVO. TVO is useless. It's a useless metric because that is fair market value for tokens that have liquidity that are nowhere near their market caps. So I just completely ignore TVO. That's why stablecoins and looking at the amount of dollars in a market is a way to peer through the bullshit of TVL numbers. TVL doesn't mean much, if anything at all, to me. It's a good observation, though, because those memes over this past weekend, everything got weird. The amount of dollars on Solana is weird. 70% increase week over week. That's just weird. Tape Pusher, hello, my friend. Could you give a TLDR on the services you use to create both ARAT and the agent? Next, please. Is it too complicated for a non-savvy person to create? No, it's remarkably easy. It's not. Virtualist is incredibly unstable. The agent doesn't respond predictably. It literally is offline most of the time at this point. Let's see if we even have a post. Oh, we did have a post recently. Okay, 53 seconds ago. So, okay, it looks like they fixed some shit finally. And I like when it works, I've imbued so much data. It comes up with some pretty good stuff. Exploring the intersection of DeFi and traditional finance. That's everything we talk about on the stream. How do cash flow protocols like CRV, USD, and Aave, Aave's finally, it's getting the damn punctuation correct. Decentralized lending mechanisms mirror conventional banking models. Well, that's a goddamn good post. All right. My baby's doing well. That's an incredible post that will go over the heads and be dismissed by almost everyone, but that's okay. That's consistent with all of my content on social media. That's an incredible post. That's everything we've done over the last years is talk about crypto in terms of traditional finance and what is the decentralized lending, even maybe more so immutable lending or deterministic lending. That's even better. But at least it understands decentralized. Maybe I'll write some manual content dealing with permissionless, with deterministic and immutable contracts, and then it'll get smarter. The problem is it's going through a relatively unintelligent LLM. You go over here, it's going through what? Yeah, it's going through Metabama. Now I am spoiled as hell because I've been using ChatGPT Pro. I wonder if I could get DeepSeek's R1 in there. I don't know. They're going to take some time. This virtual's infrastructure is going to take some time to mature, which is nice. The agent works. My token ARAT is toast from a market cap standpoint. What am I supposed to do? Everyone's degenerate, and I can't do anything about it because I'm not a shiller, and that's okay. Separate and apart. But that'd be very nice, and I'll continue to work on this because it just wrote a banger. That is a banger tweet, ladies and gentlemen, for an AI agent. So what has been achieved in the last week? A rational agent, and that was the whole point. Agent rational. I wanted a bot to talk like me and have an education like me. Doesn't have my intelligence yet because of obvious deficiencies in the LLM, and that's okay. I'm sure we'll get options in the future, maybe a very obvious setting to insert your own host an LLM. Look, this runs locally. I'll run this locally on my machine, and if they gave me an option to point to an IP address and a port, I'll expose the LLM. Great. So that would be interesting. But that's not what is right now. That's separate and apart. All right, so tape pusher. It is so literally create new agent. You could, if you have your own token, which most don't, so you click launch new token, agent, photo, biography, type, probably want on chain. And that's it, create agent. You pay in virtuals, probably a couple $100. Now, from a token standpoint, it's gonna deploy liquidity. So that gets complicated. I deployed way too little liquidity, which allowed snipers to literally run this shit through the moon. And they capitalized on everyone, basically. Hindsight's 2020. Instead of buying the way I did or burning the way I did, I probably should have deployed that liquidity initially myself and tried to buy a significant part of the token supply. All in all, I probably went through 15 grand getting this thing off the ground. And yeah, I learned a bunch from a token standpoint and launching a token, but I'm not going to get a second chance. There's no such thing as relaunch. I'm not doing anything like that. So this is what it is situation. There's no marketing because there's no revenue. If there's no trading, there's no revenue. So this thing is going to be what it's going to be. So that's how you create it. This is how you configure it. Unreliable. They recently updated this. I mean, they're literally updating this user interface every day. So it's very much a test and development type observation. Maybe they got a decent QA process. Who knows from a software development standpoint? Got to get these tags right. If you don't get these tags right, the whole thing just doesn't work. And that was the story for yesterday and good parts of this week. It just wasn't reliably functioning. But supply a set of protocols that like it's rules. You can talk about this. You can talk about this. Be conversational, textually relevant, semantic flow must be reasonable conversation. That must be that's quite redundant. Okay, thank you very much. And then agent goal, agent description, and use your favorite ChatGPT or whatever to create some good text. You want to imbue a personality. You got to keep these limited. I think goal is 200 words and descriptions 800 words. You don't want to overwhelm it. And here's the fun stuff. Data set. This is where you can add much more information. And this gets applied over here. Tweet enrichment, right? Here, retrieve knowledge tag. So upload text files where you could just literally get output of ChatGPT and talk with ChatGPT, build an information data set, search the internet. I don't know. You have that conversation with the ChatGPT and build. What I'm using it for is exporting transcripts of these streams. We have good conversations, and in doing so, you can obviously see it has gotten decently imbued with my personality. That this kind of sounds like me, which is eerie. Eerie is a good word. It sounds like me. I could have written something like this. Exploring the intersection of DeFi and traditional finance. I don't use the emojis, but I told it to use emojis. But I could have, it's just it's a weird one. That's it. That's how it works. Most other configurations are relatively straightforward. Some of these options um, are confusing because it says configure functions for simulation, but no, this isn't simulation. If you deploy this is literally what it does in production. You can have it search the internet. I didn't have it work correctly with enable. This is basically a minimal set of what I have right now that actually works, given that it literally just posted. So fundamentally post some shit as often as you can, basically every hour. Reply to people that at you, quote interesting stuff, in which case the browse tweet content from influential users comes into the picture, and browsing list is literally just my account. And that's a virtual TLDR. It's on base chain. It's just an infrastructure. And obviously Virtuals has a token which has been relatively volatile. 25%, Jesus. 40 mil liquidity. Let's go out to the daily. That's not a head and top. I don't know what is. So that's obviously, it's behaving like a meme coin. Meme coins, meme coins. Oh my God. Anywho, that's the story. Hope that helps. Critical mass, thoughts on Velodrome? I own Velodrome. Have for quite some time at this point. Velodrome has been quite productive, quite an effective addition to the portfolio. It's nice to own it. Pays good cash flow. Automatically expands, gives you free exposure to chain after chain after chain. Velodrome is my second largest exposure. Rightfully so, with position size appropriate in the context of the overall portfolio structure. Is probably 60% smaller, 70%, let's say 75% smaller than curve exposure, because that is how I chose to size it. Darius, good morning, Cap. Two questions. Best your way to earn curve and best your way to earn Ave. Work. So honestly, the fallacy is you don't come into crypto and make money. You have to work in meat space to make money to invest in crypto. And once you invest in crypto, the crypto becomes a business and it makes you money. But it's not like I will never ever support or really converse about turning 100. How do you turn $100 into a 10 grand with a meme coin? I won't talk about it like that. So there's no easy way to start the flywheel. Let's define it as a personal flywheel. If you come into the crypto space with 10 grand, your savings, so on and so forth, part of IRAs or whatever. Hopefully, it's only a part of your IRAs or retirement accounts, or 401ks. Pay the penalty. Back in 2019, I paid the tax penalty, and that's how I started, with X amount of capital. And then cycle after cycle, capital flows keep coming in. You're compounding through in bear markets, and you're accumulating in bull markets. That's from hindsight and recent expertise. And you're buying at the bottom, and the portfolio is growing. You buy at the cheapest price possible. More recent types of conversations, buy the discounts. Earning curve and earning Ave. I don't know about earning Ave, but Ave is a decent investment because it's a bank. It's probably as equally underappreciated as anything else we talk about. If it walks and talks like a bank, it is a bank. A bank priced at, let's see, market cap, $5 billion market cap. There is no big bank out there at a $5 billion market cap. And they literally have deposits like 30 something, let's say $35 billion right now. They have deposits that exceed their market cap. So what's that say from a price, spot price to NAV? So this is mispriced insanely. It doesn't pay much. If you go over to dollars and we go over here, it doesn't pay much. It only pays 4.71%, but it's exposure to a bank, which is very compelling narrative. Sized appropriately, I mean, I think about 400% from entry, give or take, whatever. This is just let it do what it's going to do. Because if anything's going to get repriced in crypto markets, it's Aave. I mean, when Bitcoin's running around at a trill and Ethereum's at what, 750 bill to 1.25 trill, notice flippening overtone in that statement. Obviously, not going to be priced at 5 bill. It's going to be 50 bill, 100 bill. I think we're going to see a lot of protocols start to get very interesting as compared to like Ethereum pricing. Once the children exceed the parent, then you're in a mature market. That was an argument back in 21 where you start to see protocols that become more valuable than the actual network. And I agree with that sentiment. I expect that as well. So I don't have an answer for how do you earn Curve and earn Aave. You're talking about 4.71% on Aave. So if you have a $100,000 investment, it's paying $4,700 a year. It's not very cash flow productive, but if you go over to flows, if you go over to vote market, you could see that what are the rates of return here. Smaller investments could probably get, upwards of 20%, 16 and change. AWA still throwing around. Actual AWA at 11% is pretty cool, 0.001827 per VE curve vote. That's pretty compelling. The king, you know who the king of curve is really from a vote rental standpoint? Abracadabra. Magic internet money. They own it. They have been one of the dominant voters forever. And at this point, that flywheel is just going to keep paying because they understand how the system works. This is up. Weekly rewards is up. Votes are actually down. This vote rental revenue is actually insane. It's actually insane in the context of 22, 23, and 24. It's good to see these numbers come back. It's been a long time in the making. So if base V curve pays 3, 4, 5%, and again 15% on vote rental revenue, you're talking about 20%, $100,000 investment makes $20,000 a year. And clearly, every characteristic of that investment is volatile, principal valuation, as well as cash flow, rate of return. I hope that helps. There is no answer that is easy. To make money, one must have money. I know my entire experience in the crypto space started with a good portion of all my savings for my entire career being reallocated to crypto from equities markets. And it's not as much as people think. It was, high 5, maybe borderline 6 figures, small. The threshold maybe 90 to 100, give or take. This was a long time ago. And which brings up conversations for new participants in crypto. That's why everyone's so degenerate on Solana, because of prevailing social conversations, socioeconomic conversations, and I don't know. I don't want to get into that too much because I end up talking like a parent, and that is not the conversation folks really want to hear. Hope that helps, Darius. John Doe, last bull market occurred with DXY conditions flat or positive. No. Last bull market occurred with the DXY completely rolling over from 102 to 88. So it's not flat or positive. That was a massive decline in the dollar. Here's your bull market, 1617, 2021. This isn't a bull market. Because if you had the guppies, they're not red guppies. This was a mean regression from the upside. This is a massive move to stabilize the global economy. These aren't bull markets right here. Very important to understand that. I feel like most of the DXY action is based on the carry trade. No, not even close. You got Europe in the mix, and more importantly, you got China. So as interest rate spreads come down between Japan, who raised interest rates yesterday, 25 basis points, you're going to get a deleveraging of the carry trade. which is going to cause capital to flow out of the United States. The only inspection to make from a relative dollar valuation perspective is it manages the flow of capital into or out of the United States. As interest rate spreads narrow, capital starts to flow out of the United States. That is the part of the cycle we're in. The Fed is done raising meaningfully. Interest rate spreads will not be increasing, they will be decreasing. Capital will flow out of the United States, which means broadly the demonetization of US equities. Now, you could look to stuff like this and basically say that US equities never recovered. I'm not looking at no S&P, which is an ETF. I'm not looking at no NASDAQ, which is an ETF. Technically, IWM is an ETF, but it gives you a better perspective on the market, and it basically tells you that fuck all has happened since 2021. No all-time high, no breakout. U.S. equity markets are a complete disaster. You want even a better perspective, you look at something like RSP, equal weight. The breadth here is not very exciting, especially compared to the S&P. Look at that breadth. This is because it's heavyweight tech and Mag 7 shit, that type of conversation, concentration of capital. This shit collapses to 4,900. What we do? It's a mean regression. Literally a mean regression to the 100 SMA on the weekly. People will be screaming if 6150 became 5,000 on the S&P. Meanwhile, it means nothing from a moving average standpoint. There we have a blow off bottom, and you punch the 200 SMA on the weekly with a nice wick, maybe, probably, just like 2020. You're down at 4,500. People will be freaking out from 6150. Meanwhile, all right, great. It bounces back, finds support, wick closes on the 200 SMA. It's just a mean regression. So U.S. equities are broadly decimated. Industrials are gutted. Gold stocks are not moving at all, considering gold is at 2,775. There's malinvestment everywhere. It's, to say the least, it's quite stark. So people get a very incorrect impression when they look at, MSNBC, the news channels, the financial news channels. There's nothing good about U.S. equities. You don't own a company. You don't own anything. They pay you nothing. You are a means of extracting. You are a vessel to extract capital from. That's what U.S. equities are. They use you, the people, as a capital raise. Boomer meme coins. It's the best expression of what equities are. John Doe, which creates positive liquidity growth, economic activity. Liquidity growth. Well, you want to see the move rollover. You see the move rollover, and that is you telling you that the collateral in the system is becoming prime to be leveraged. As move rolls over, the global Aave health factor goes up and to the right. It's basically a crypto way to understand the way global financials work. Economic activity is probably a manifestation mostly of sentiment. Certainly liquidity, like capital availability. Velocity is what activity is, churn of capital. So it's very much driven by sentiment. Look at the sentiment on Solana. Look at all that economic activity. Liquidity just flowed in. There's a frenzy of positive green percentages. So the economic activity is through the roof. Same thing happens with companies. If all of a sudden a company doubles its revenue, it causes a frenzy of investments. It's all the same shit. Meme coins on Solana and equities. It's all the same thing. Present and accounted for. Sir Joe, sir, yes, sir. Bad are my eyes deceiving me? Do you actually own liquidity? Yes, I acquired a liquidity position. I own liquidity. It is a permanent position in the portfolio. Name one token that will benefit the most from regulatory clarity. I'll go after you. Noise. My response is it's noise. Regulatory clarity, like the repeal of Sub 121, which just went down, that's your regulatory clarity, which is going to allow the banks to create products and services for cryptocurrencies. So that's where the regulatory clarity comes into the picture. Regulatory clarity will ultimately facilitate significant capital inflows, exogenous capital inflows into these crypto markets. Potentially down the line, use of endogenous currency units in traditional finance. That's cool. That would cause more exogenous capital flows, more investment, more financial activity. I don't think any token is meaningful from a regulatory clarity standpoint. I think it's all meaningful. All tokens are meaningful from a regulatory clarity standpoint, particularly with regard to the banks and large hedge funds, that have billions upon billions of dollars, and unless they have proper accounting or expected predictable treatment by a regulatory authority, they can't really engage in these markets. But that's not the case anymore, and that is probably going to change quick because there's a great deal of opportunity in these markets and certainly great businesses to own. Teddy, can you look at the Juke chart? I think it's one of the strangest looking charts in all of crypto. 10 mil liquidity. Weekly. It's a hell of a wick. Someone exited a big position. Up and to the right, 2% on the day. What's the volume? 9-month-old chart, fully diluted value. So it's fully diluted, which is interesting. 10 mil. Oh, well, that's why that wick exists. There's only 10 mil in liquidity. What other liquidity is there? Look, 15 mil, 21 mil, 5. Nice. So maybe there's a little over 20 mil in liquidity. And it's at a 1.83 billion. It's 20 mil in liquidity with a 1.83 billion market cap. This is the last thing I want to own. Last thing. Isn't there like access to trading shit? Which is there trading fee? It doesn't matter. Look at the price appreciation. The last thing this is at a discount. Oh, it's not actually that bad. 250. It's up 100%. It's at 1.8 bill. I don't know. I don't find it appealing. I wish there was a CDP liability printer. I look forward to Solve 3, which is a VE33 implementation on Solana, and I won't be buying it. You get an airdrop for VE brand, Velodrome, and whatnot, aerodrome exposure. So that's cool. You got to be careful on Solana because it's all a frenzy. This is clearly a manifestation of excess allocation of capital. And that's a very scary wick right here. Anyhow, we'll keep this up. Let's keep Bitcoin up as I continue. John Doe, you're very welcome. Much a pleasure. 10 years later, Agent Rational will be doing the one-on-ones and getting on here to rant. Why not? I look forward to that. I will continue Agent Rational's education, and he should get better and better. And ARAT is used for one-on-one sessions with myself. There is a purpose for the token. That's not a purpose that anyone really gives a shit about on Base or Solana from a meme coin standpoint. They want to see marketing. They want to see vol bots and wherever the top meme coin charts are displayed other than Dex Screener. And you can even get Boost on Dex Screener. I played with Boost on Dex Screener for ARAT. I don't like that meme coin game. Point is, ARAT, you want to do a one-on-one session, you jump on Discord, our Discord, create a ticket. We get a calendar appointment, and you pay me in ARAT by burning it. You're not sending it to me. You are literally asked to burn it. So that is probably the most meaningful use case for a token I could think of. It's not going to cause significant buyback and burn. If there was more trading fees, I burned it all. Every trading fee that I've had, I've either spent it on marketing or I burned it. So token is going to be what it's going to be. It has a use case. It will continue to exist. It will find the floor. And Agent Rational is getting educated. Tape Pusher, my man. I thought a concept. How do you launch the AI bot from virtuals? You've launched in the top right. I went over it early in the stream. If you want to see more screenshots. Wow. Okay, create new agent on the top right. Simple as that. Can't miss it. Johannes, hello. How are you? Been a while. Welcome. Good to see you as well. Thank you for streaming. Have you followed the recent Ethereum drama? Noise. It's noise. I look forward to better organized Ethereum leadership. I agree with everything everyone has said, especially Tetranode. As simple as that. Not much more that I need to or have to say on the topic. I wish they were more supportive of the community. I think them spending or selling Ethereum is stupid. You should throw it on Aave. Throw it anywhere. Borrow against it and lend the stables. I don't fucking know. You know what you could do with their stack of cash? That's absolutely insane that they're not using that in a productive way rather than selling it. Selling it is just insane. Anyhow, hope that helps, Johannes. Good to see you. Athletic concept, can you dive into the flywheel with Curve and how the votes work? Do people get paid out of the pool with the highest votes? No. Uh, not really a flywheel. I mean, there's a flywheel with regard to the federation concept. Curve creates Curve tokens as an incentive system. People buy those tokens, which allows them access to governance. And when you could vote and exercise governance, you could direct Curve emissions. Protocols in the crypto space can rent those votes from you to direct emissions to their respective or desired LP pair. In this way, protocols have access to capital efficient liquidity financing. So let's say token A and token B just launched and they want to encourage liquidity depth. They could put $10,000 USDC and that'll help. That's literally exactly what Liquidity V2 did. They deployed $75,000 worth of stables. Now, I think it was LUSD actually. But as the business operation matures, why put direct incentives when you could rent votes from the community and get $100,000 worth of incentive applied? It's much more capital efficient, and that's the whole business to business B2B proposition for Curve Finance as a product offering. Capital efficient liquidity financing. And obviously, when you have exposure to the curve, you're getting your pro rata share of CRV USD revenue as well as transaction fee revenue from the exchange. That not pool with the highest votes, you get paid based on the pool that you vote for and you are incentivized to vote for the pool because this capital is being paid. These are third parties. Each of these is someone else, not Curve saying, oh, I got a marketing budget and I'm going to spend it so someone could vote for my LP. That is the flywheel. The Curve price is supported by third parties incentivizing people to lock CRV as VECRP. And that is the overarching principle of the Curve Federation. This is a supply sink. This is the incentive that allows circulating supply to go down and compensate for the emissions. So you have an increase in supply because of emissions, you have a decrease in supply because of third parties incentivizing people to lock to gain access to the third-party revenue streams. Curve Federation 101, long story. We used to tell that back in 2021 and maybe 22 for a little bit. But Curve Federation is something that maybe we come back to. If folks ask and want that story, we could dig into it a little bit more. My man. And exactly, regulatory clarity brings the big boys like banks and their entire capital market liquidity into the blockchain via Chainlink. No. Tether? Um, or how does big capital get into the system? Ripple stablecoin is on the table, but there's not much liquidity. It's not really used much. I mean, there's barely a presence on mainnet. And they're not financing any liquidity or anything, so there's not really an interesting opportunity there for liquidity depth. And the banks can only get involved if there's significant liquidity available for them to engage in what are likely to be relatively large sized transactions. So it's probably Tether. I mean, USDC, increasingly regulated in the United States, redeemable stablecoin, whereas Tether is not equally redeemable in the same way, different business rules. I mean, Chainlink does nothing for the banks. The banks, it's probably USDC actually, because they literally just can deposit in their own institution, set up an agreement with Circle, and they could just print the liabilities directly on chain. And now that Circle has USDC on so many chains, quite an efficient collaboration between those two business entities. Chainlink is probably going to be used more so for business opportunity, entrepreneurs, tokenized real estate, or some business that wants to put corn on chain. I don't know. I mean, Chainlink is probably useful for the stock market. ICE, Intercontinental Exchange, NASDAQ and whatnot, CME, to put those types of instruments, securities, and whatnot, derivatives on chain. That makes sense. CCIP will be useful, not CCIP, just on-chain tokenization using Chainlink's product offerings. Chainlink's interesting because Layer 0 has so much more entrenchment and traction on chain. I mean, it's literally Chainlink is used like 2% compared to Layer 0 on chain. I'm not too interested in off chain. Like the narrative for Chainlink is get stuff from the real world on chain. I'm more interested in how people are going across chains in the crypto space. Because probably the biggest short-sighted perspective is to see the size of the real world and like, oh, they're gonna move so much shit on chain. And I'm like, okay, good. Let them move shit on chain. I want to own this shit on chain and watch it balloon 100x in size, scale, and scope. That's much more interesting to me. So I'm much more interested in Layer 0 than Chainlink in that regard. Not that I have any Layer 0 exposure. I'm more interested in Stargate, because Stargate, you get transaction fees for cross-chain operations. That's my 2 cents. Sticking to it. Ryan, what's going on with Ramses? Is it a circumstance with broader DeFi sentiment or something else? Yeah, Arbitrum is bleeding out from a dollar supply standpoint. You go over to analytics and volume, DEXs, Arbitrum, not volume, stables, Arbitrum, minus 6% week over week. This is a massive bleed out. It was 10% previously, at a high of 6.91, and we're now at 3. It's a 50% bleed out of stablecoin supply. That's as simple as it is. Same with optimism bleeding out. Solana is running multiples on supply and volume. So right now, financial activity is extracting capital from everywhere. It's all going to Solana for degeneracy and gambling and all that debauchery and perversion. All that money comes back. Cycles will cycle. Capital gets bored over there, comes back over to mainnet for investments, and actual shit that people could buy that has significant meaning. Um, so that's it. I don't, I don't think anything of the narrative has changed other than status quo for crypto, that it's extremely volatile. Bots and stuff. Have you found any good dashboards for Spectra? Uh, there's no revenue for Spectra. I can't justify a position, unfortunately. I want to. The price point's getting there. Right back into previous resistance. This is going to be interesting to see what it does. Because that is a bounce right at the previous resistance. But that was a complete retrace. Complete retrace from 23 cents down to 4.8 cents. So if anything, you're in discount territory. The problem is, here's the gauges. The only thing that stabilizes the price of Spectra is third-party vote rentals, not APY. You need vote incentives. And right now, the vote incentives are boring AF. The vote incentives, just like with Curve, this is a voter escrow protocol. It is dependent on third parties to incentivize the locking of Spectra vis-a-vis the vote rental feedback flywheel mechanic that we described for Curve. LP incentives, 80 grand. Where the hell are the LP incentives? I don't see 80 grand displayed. What am I missing? Oh, you know what? Oh, no, that's exactly it. I don't give a shit about LP incentives. I want voting incentives. So the voting incentives are driving the LP incentives right now. The I don't think this goes up from here. I think this gets rejected. The the amount that Spectra is spending is significantly greater than the vote incentive. This is a skew of 40x. You want this to be the other way around. You want the revenue to be greater than the LP incentives. So it's not there yet. That's my 2 cents. Brave browser, there's no extension. It's built in. Right click on any tab and you got tab groups. That's how you do that. Any idea if Spectra is rebasing for anti-dilution? No. The only thing that had rebasing was Andre's vision for Solidly, and all the Solidly exchanges rebase other than Solidly. And Solve 3 won't have rebases, but obviously Velodrome, Aerodrome, and Kingdom rebase to mitigate dilution. That's part of Andre's idea. I'm very curious what the hell happens on Sonic. Sonic is insane, and Shadow is dominating. Shadow is totalitarian control over Sonic. No other way to say it. It is a speculative frenzy. And it's doing $44 million a day in volume. Big spike over here, Jesus. Down to 14 mil. You have the rest of the day. Oh, that was yesterday. Yesterday was a significant low on the market. So obviously a market that's just barely getting off the ground can expect significant volatility. Nice to see. Look at WAGMI. Daniel Sesta. There's a hey anon. Hey. Those are big numbers. Sonic is max risk, max reward territory. High opinion of what's potential there. I mean, if anything could do what like Solana's doing, maybe it's Sonic, has the transaction throughput. It's not the comfort zone. Deploying on Solana and Sonic, and it's not the comfort zone. Your comfort zone is mainnet, base, optimism, arbitrum. That's the comfort zone because those are much more established. There's much more time in the market. They're much more trusted, much further along in development, has much more fintech enterprise, established, trusted fintech enterprise, investable. Things are investment grade on those networks. This is all speculative revenue territory, brand new territory. Nothing is tried and tested yet. You need a cycle. That's the massive difference, and that's why capital flows to mainnet the way it does, because it's gone through cycles. Things survive. Infrastructure survived. You don't have that with these new chains. You don't have that with Solana yet either. That's my 2 cents. Hope that helps, ladies and gentlemen. We're going to wrap it up today. That was a nice stream. We talked about a lot of protocols. We talked about tokens. Talked about virtuals. Talked about the dollar, obviously, because that is what tells us what the hell is going on in the system. We'll end it on that note. Friday, January 24th at 12:52 p.m. Thank you all for joining me today. 280 people made it to the end of the stream, and you are all a little bit more rational because of it. I wish you all a good one. Enjoy your weekend, and I will see you all next week. Peace.